Good day, everybody. This is Mike Zuzolo with your Friday, May 24th grain market update. First of all, I'd like to say a special thank you to all of our veterans and service members for your sacrifice to our country this special holiday weekend. After opening lower across the board on what appeared to be some end-of-the-week program-related selling, grain markets by and large were able to gain their footing as we progressed through Friday's trade, and the long weekend had some supportive technicals and some supportive short-term weather ahead of it as well, helping us to bring back a little short covering heading into the close. Corn was initially the leader to the downside when the pits opened on Friday. The lower wheat and the good planting weather to finish this current week up seemed to create the liquidation pressure. However, by the time the noontime weather models were released, corn actually led the rest of the markets in short covering, with September futures finding the strongest buying. I suspect that one of the continued features to this market in September is the lack of farmer selling seen this past week, and as well as renewed concerns that next week's wetter Corn Belt forecast could create a replant issue in certain parts of Illinois and especially in Iowa. Some of the midday models were projecting 2 to 4 inches of rain in Des Moines and Peoria. Areas such as this, if they got that in the next 5 to 6 days, clients out there, producers I work with out there, are suggesting that would be a replant situation. So corn had the best turn of the day on Friday. I think that was probably the main reason why. Wheat started the day lower as well on Friday with the corn, even though USDA reported some fresh export sales of 180,000 tons to China. But the weather models at midday also came in with a hotter, drier forecast for western Kansas, eastern Colorado. Neither of these two things seemed to help the wheat market on Friday's close. European wheat markets sank on their close, lent a lot of weight to the market. So we saw July Chicago wheat slip back below $7. That's something to watch as we come back on the from the holiday weekend. Beans continued their path from Thursday, while wet weather and possible planting delays kept the new crop strong. July futures continued its correction, and weakening basis and weakening cash prices helped do that. We also saw the new crop market move in opposite directions, so that by the end of Friday's trade, we saw another 25+% correction in the July note bean spread. For more information, go to globalanalytics.biz, and please remember there is substantial risk of loss in trading futures and options. The impact of cycles or current events on prices may be already reflected in futures. Have a great weekend.